So today's pre-culture shifting virtual fireside chat with Chairman Clayton is being led by Osei Van Horn. I'd like to share a little background about Osei and then turn it over to him to introduce Chairman Clayton and talk a little bit about his role at the SEC and then jump into the chat. So Mr. Van Horn is the founding member and managing director of the Growth Equity Technology Practice at Wells Fargo Strategic Capital. It's a multi-billion equity investment vehicle. And according to PitchBook, his practice is one of the most active prop tech and logistics tech investors in the market. Excuse me, this year, Mr. Van Horn was named as one of the top 50 global corporate venture capitalists by the Global Corporate Venturing organization. Mr. Van Horn was a private equity investor in the merchant bank division of Goldman Sachs, where he executed transactions from a multi-strategy growth capital fund. He's also taught at Harvard University, Columbia University, and served as an adjunct professor at New York University, where he taught venture capital and mergers and acquisitions. Mr. Van Horn has published several works concerning private equity process optimization, most recently in the Journal of Private Equity. He is a proud graduate of Howard University, go Howard, and he resides with his wife and two daughters. He's apparently a girl dad in San Francisco, and I believe he just got voted on the board of a company. I'll let him talk about that, but Osei, over to you.
Thank you for the warm introduction, Andrea. Good afternoon, everyone. Chairman Clayton, you have a long and distinguished career. For those that are joining today, let me share a little bit of Chairman Clayton's biography. Chairman Clayton was sworn in as chair of the U.S. Securities and Exchange Commission in 2017. Chairman Clayton is a member of the President's Working Group on Financial Markets, the Financial Stability Oversight Council, and the Financial Stability Board. He also participates on the board of International Organization of Securities Commissions. Prior to joining the SEC, Chairman Clayton was a partner at Sullivan Cromwell, where he was a member of the firm's management committee and co-head of the firm's corporate practice. From 2009 to 17, Chairman Clayton was a lecturer in law and adjunct professor at the University of Pennsylvania Law School. Prior to joining Sullivan Cromwell, Chairman Clayton served as a law clerk for the Honorable Marvin Katz of the U.S. District Court of the Eastern District of Pennsylvania. A member of the New York and Washington, D.C. bars, Chairman Clayton earned a BS in engineering from the University of Pennsylvania, a BA and MA in economics from the University of Cambridge, and a JD from the University of Pennsylvania Law School. A mouthful. It is an honor to be here with you, Chairman Clayton.
Osei, thank you. That was very kind, and it's actually my honor to be with all of you today.
Wonderful. Before I begin, I like to just state the obvious. We are in unprecedented times. As a technology investor myself, I have seen firsthand large industries upended by emerging technologies. We are in the throes of a global pandemic that will stress our technological infrastructure and social safety net. And as agencies such as the SEC focus on stabilizing the country, there are parties from all stations in society seeking that those policies be crafted in such a manner where everyone can equitably benefit. Any one of these dynamics is challenging. Taken together, they feel insurmountable. And this SEC, of course, plays a role in these matters, but by no means are you the only party at the table. Right? And candidly, I'm encouraged by your agency's tireless work on the issues, especially in an environment as scrutinizing as the one that we're in today. So with that, let's just jump into it.
Yeah. Please.
First and foremost, thank you for serving our country. The SEC chairman role is one that requires thick skin. And my first question is really, what has been the most challenging aspect of your job, and how would you describe the transition from the private sector to your role in government?
You know what? I think that's the first time I've really been asked that question. And what's the most challenging aspect of transitioning? And, in the private sector as a lawyer, objectives are pretty well defined. You have a client, you have an obligation to that client, your client has goals, you have the benefits and constraints of the law, and within those kinds of guardrails, you do the best you can. Not that lawyering is simple, not that private sector lawyering is simple, but it's pretty well defined. It may be complex, but it's pretty well defined. Here at the SEC, your mission is a much broader one. It's function, protection, efficiency, fairness, those broad concepts. And I quickly learned that I really had to rely on the career staff and the structure of the organization. And my job was to make sure that structure of the organization, that inertia that it had, was channeled broadly in the right direction. And that was a big shift. It's a big shift in how you look at things. And and that requires getting to know people. So I realized that we're a small enough organization, roughly just under 5,000 people, that you really got to get to know the people and what makes them tick to understand how to do that well. And so luckily, the people here are very welcoming, and I feel like I have a good handle on what makes us run. And the last thing I'll say there, and I think we'll pick up on this theme, I'm sure, later on, is that this is a human capital operation. If you look at our budget, we've got like 15% for IT and stuff like that, something for real estate, and the rest of it is people. That's what we do. So it is really a people-based organization.
Yeah, no, that's great. And in some ways, just listening to you share that, like I said, we are in really challenging times, right? And you lead this organization, you said roughly about 5,000 people under your watch. And each and every one of them are being impacted by the pandemic in both professional and personal ways. What are the key touchstones for keeping such an important agency operational despite the unprecedented challenges?
Well, I'm gonna, people call me an over-optimist, but I do really try to look at things half full. If this had occurred a decade ago, we would be in trouble. We would have to be taking much greater health and safety risks in order to operate, in order to do our basic functions. But early in March, we made the decision to send everybody home. And I wasn't really sure how well we would be able to function, but I just thought that with our technology backbone and the like, we'd be able to do it. And I've been heartened that we've greatly exceeded my expectations in terms of ability to operate remotely, people, venues like this, et cetera. I think I'll give you a stat. We had 36,000 WebEx meetings last month.
Oh my goodness.
Yeah. I mean, I guess I shouldn't mention a company, but I just did. But anyway, those are the facts. But but let me say a couple things about that. I think we've been able to perform so well because before we shifted to that environment, we all knew each other pretty well. And that's something that we're trying to continue to foster. We don't have a great deal of turnover here, 100, 200 new people a year. But one of the things we're trying to make sure happens is that the new people who come in somehow get to know their colleagues in some way close to the way we used to do it here. So sort of glass half full, our technology backbone has allowed us to do this, and I know we could not have done it 10 years ago.
No,
I hope that
that's
answers the
that's
question.
no, that's a great point, and it in some ways the question is how does the world look after this, right? Remote work from home is a big task to get right. And so it's interesting that you highlight the technology backbone. You know, it's something certainly that folks at Flawless think about in terms of cybersecurity and work from home. And I'm sure countless other companies across the country are grappling and trying to get those issues tied down. So thanks for sharing. You know, I think continuing on the COVID-19 topic, how has the pandemic impacted your thinking around investor disclosures?
Well, thank goodness we inherited the system we have. Now, think about it this way. Public companies, quarterly, and whenever there's a significant event, are required to communicate with their shareholders. And they're required to communicate with their shareholders not pursuant to some checklist. There are obviously requirements, but they're required to communicate, as I say broadly, what's happening in the boardroom and the management suite of the company and how they're looking at their business going forward. Well, that shifted profoundly for many businesses and industries as a result of the pandemic. You went from thinking about, how am I going to cut costs, increase revenues, do those sort of things to, move a few dials in the business or maybe some strategic transactions to what's my liquidity profile? How much cash do I have access to? How much of revenue's been hit? What am I going to do in terms of managing my workforce and making sure that they're healthy? How can I operate effectively? Those are all new questions, but for the most part, companies did a pretty good job of explaining how they were approaching those questions. First quarter reporting, I thought it was pretty good. Second quarter reporting, I'll pick an industry. I watched the airlines. The airlines were hitting, they're fairly, well understood from a microeconomic perspective businesses, but they were hitting those metrics kind of across the board, explaining their cash burn, explaining their ridership, doing those things. And I think both the specific companies and generally across the public company ecosystem, people have a pretty good understanding of how things are going and how much companies can withstand of this continued constrained environment. So, again, glass half full, pretty good. Glass half empty, we got challenges, but you're better at handling challenges if you understand them.
No, that's helpful. I think the topic of disclosures is one that certainly is top of mind for us. Although I invest in the private markets, we often the valuations are often inform private company multiples really throughout all of these various ecosystems. And so understanding the dynamics is really important.
Yeah, you make a great point, if you don't mind me jumping in. Something way underestimated, the value of prices. When you have those public company price benchmarks and metrics, you tell me, I bet it makes it's a foundation for your private sector investment.
Oh, absolutely. Yeah, my partner Matt and I probably spend far too much time looking at where the ebbs and flows of the public market and what it means for our current book value. But yeah, no, very helpful, and thanks for sharing that. I think, this is going to make it a little bit of a theme. It's probably the fourth question in a row on COVID-19. But just to be thorough, if nothing else, wanted to spend a little bit of time diving into the tech and how you're thinking about COVID-19 in other ways and how technology impacts that. And so, I think COVID-19, the crisis, is a strong reminder of the importance of resilient and trusted payments infrastructure that is accessible to all Americans, enabling government to more swiftly provide stimulus to the most vulnerable populations. Governor Brainerd at the Federal Reserve Bank of San Francisco is active in conducting research and experimentation related to distributed ledger technologies and the potential use cases for digital currencies. I would love to get your current view on cryptocurrencies?
Sure. Sure. First of all, Governor Brainerd's doing a great job, in tackling this issue that I do believe we need to be proactive on. And from a perspective, let's put aside crypto assets that are securities. Let's just put that aside. Instead of issuing a stock, you issue a token, and it's the same thing. But let's talk about payment systems and the use of digital currencies in the payment system. The market is, my view, the market is telling us the time has come for this. Like in many things, technology should be able to take some fat out of the system without jeopardizing the safeguards that are built into the system. So said in a fairly simple way, we ought to be able to find a way to do KYC, Know Your Customer, AML, anti-money laundering, BSA, Bank Secrecy Act, and these other functions that provide I would say, safeguards built onto our payment system. We ought to be able to do that in a cheap way, in a digital way, and have the kind of certainty, resiliency, and the like that we all expect from our payments and settlement systems.
Now, I'm right there with you, and it'll be interesting to see how that evolves over time, especially in light of some of the dynamics with Facebook's Lira and other cryptocurrencies that are.
Can I make one other point about this too, and the pandemic, just to stay there?
Sure.
What you see in times of uncertainty is people searching for certainty. And one of the things that we saw in March was this substantial flight to cash and near cash assets, and in particular, dollar-denominated assets, treasuries and the like. And it's just a reminder of how important that kind of payments system is. So anyway, there you go.
No, that's helpful. And to not make this entire fireside chat about COVID-19, I'm sure we can go on for quite some time.
I'm enjoying it. Not COVID-19, the chat.
Oh yeah. Well, let's transition to something near and dear to my heart. We've been talking a little bit about tech, but let's go deeper in there. As a private equity and venture investor, I've seen dramatic increase in the flow of capital into alternatives over the last 5 to 10 years. By and large, retail investors have been locked out of participating in alternatives. What's your view on providing increased access to the various alternative sub-asset classes?
So my view is we at the commission, I have an obligation to figure out if we can do that in a way that is consistent with our investor protection mandate. Because we're talking about a system that has changed from 99-1 to 50-50 to maybe, 40-60 in favor of the private markets. Well-managed endowments and pension funds have significant exposure, long-term exposure to alternatives, and individuals in their retirement accounts do not. So if you think about all of those things and add them up, you say, well, shouldn't we be looking for ways to provide individual investors with access in a way that's consistent? And I think I'm an optimist. I think we can find it. What you need is alignment of interest with the professional investors. So one of the great things about our public markets is when I buy a share of stock in the public market as a retail investor, I'm sitting side by side with the institutional investors, largely getting the same deal. I get the same returns, I get the same dividends, I probably get the same execution on getting in and out. How do you replicate that with exposure to alternatives? And I think there are ways to do it. And then also, how do you make sure that people understand and are managing what I would say is that liquidity or illiquidity risks that you have in the private markets versus the public markets? I have to face up to it, have to figure out how to solve it, but I think we can.
Yeah, I'd echo that. I think the trend has been steady and continuous. And, I think that's only going to further accelerate as you see private companies staying private much longer as capital continues to flood into the private markets. So that's helpful to hear. Thank you for that. Under your watch, you've sought to drive technological innovation really throughout the agency. And one of the reasons why I was really excited to chat with you today. I think it's great, it's refreshing, and I think ultimately will be beneficial for everyone. Your team has taken several actions to order national securities exchanges to modernize market system plans with the objective of increasing competition, reducing costs, and hopefully democratizing the market data. Can you share more about the actions you've taken and what you hope the impact will be on the industry?
Sure. Look, we have a, let me also try to level set here. I sometimes use the word virtual or virtually all. You could almost say all trading is electronic. Right? Yes. Execution of tradings in our public markets is electronic. In that world, which is relatively new, information, depth of information, and speed of information are critical. You do better with greater information. You do better with faster information. It's tautological. And what we have to do is examine our information flows and availability in terms of depth of information and speed, and say, have we created a fair system, but also a system, and I recognize this, that continues to drive innovation and striving for more information. And so what we've done is we've taken a look at it and said, is the base level of information available to everybody sufficient, or does it need to be improved? And is the way that information is sort of priced and provided beyond that base level of information, is it consistent with our competitive approach to technology? So that's what we're doing. I think those are questions that you just have to continuously ask in an evolving marketplace. And we have a nice team. They understand this ecosystem, and I think they're improving it.
In preparation for this chat, I was able to watch a recent CNBC interview that you had, where you shared that the agency was focused on, I think you said rooting out fraud that targets vulnerable populations. Mm-hmm. In particular, you named teachers, military, the elderly. Mm-hmm. How are you going after bad actors targeting these folks? And, how's the SEC using technology and data analytics to address emerging threats?
So I'll deal with those a little bit separately. Organically, again, the teacher and military initiative we have here grew up out of the staff. And a number of people who recognize that, I'll just say it, teachers are a very trusting group of people. They're also a group of people who are generally investing for the very long term. Most teachers teach for a little bit, or they go on to do something else, or teach for their whole life. And they're dedicated people. That's a vulnerable group because they're turning over $50, $100, $200 a month to you time after time after time, and they may not even look. And the question is, are they getting a fair deal? And we've devoted some resources to go around and say, are they being told the truth, and are they getting a fair deal? Are they being told how much it's costing them to invest? And I say bearing fruit. Unfortunately, it's bearing fruit in that there are cases where they're not being told the truth, and if they were, they would make a different investment decision. And they're not being told the whole story. And that is what we're all about. Investors should be told the whole story in a way they can understand it so that they can make good choices. So that's what we're doing there. Same thing with military. In particular, they don't have time to look after their investments or know what's going on. You want them to be in a position where they can quickly assess whether they're making the right choices or not. Electronic surveillance, insider trading, market integrity. We've greatly increased our ability in that area. I don't want to give away, a lot of in-house secrets, but we can use data to make connections that you really can't make with the naked eye. People who appear to have no relationship with each other, but then when you put some data together, you realize that they probably did have a phone call that was an inappropriate phone call. And then on trade timing and things like that, we can use some analytics to, what I say, help prove that the chances that this was by chance were like 1 in a million. And that's a powerful tool when it comes to rooting out misbehavior.
That's great. That's great. And the laundry list of actions that you've taken during your tenure in this regard has just really been impressive. And in some ways dovetails nicely into this next question where, as we were looking at the various actions, another one that really popped out for us was, the agency's efforts to develop a consolidated audit trail to surveil a comprehensive record of every trade that's occurring in the equities markets. I think that's an exciting step forward. I'd love to get your thoughts on the impact of the initiative and how you see, again, technology improving the SEC's ability to more quickly respond to market events and to root out fraud.
So markets are interconnected. Trades in one market affect trades in another market, particularly in times of stress. We saw that in March. Prior to the concept of the consolidated audit trail, our ability to do cross-market surveillance and market reconstruction as to, okay, this particular product sort of did not behave as it was supposed to. That had ripple effects across other markets. Our ability to sort of understand what happened, people call it the flash crash or whatever, was constrained by our ability to sort of pick data across different markets and see what was happening in a contemporaneous time frame. The Consolidated Audit Trail, or CAT, should enable us to do that kind of analysis, which I think will improve our ability, what I would say is to anticipate problems and make sure they don't happen. It will also help us with general surveillance. So, I've made it a priority to actually bring it to conclusion. It had a troubled start. There's no tech project of this size and scale that doesn't have a troubled start. But we're doing better. The people responsible for building it from the private sector and the SROs are doing better. We introduced financial accountability. That was important. So I'm optimistic that we're going to get there with a functional CAT that, I should note, has a greatly reduced risk profile from a PII and standpoint.
Got it. So, let's switch gears.
Okay.
We're spending a lot of time talking about tech,
yeah.
and before that, COVID. Switching gears to access to capital.
Mm-hmm.
This is a topic that I spent, almost 12 years focusing on in one degree or another. When I was at Goldman, spent a lot of time thinking through access to capital issues there as a part of that investment unit. And at Wells, we're doing the same. Small and mid-sized businesses need capital to grow and survive, especially in markets like the one we're in today. Many underrepresented founders struggle to access investor capital, which in turn and obviously impacts their ability to grow their businesses. Can you share more about how the SEC, its staff, and its small business capital formation advisory team is working to address access to capital issues for small businesses?
Well, I'm going to give a shout out to our small business small business capital advocate and her team. They are punching way above their weight. They're doing a great job. And again, starting with, let's understand the issue, make it better to solve. I'm going to give you my gloss on it. Again, I'm speaking for myself, not for the, but there's really sort of three phases of providing capital to a business. There's sort of the friends and family, get it off the ground, get your seed money going. and then there's that growth phase. And what I call it for is it's the phase with so many hurdles, because you're not quite to the third phase, which is where institutional money becomes available to you. And people say, okay, well, that first phase is sort of, 500,000 to 1.5 million valuation of a company, but that depends on who your friends and family are. It's really hard, and depending on who your friends and family are. So that first phase, then you have maybe till you tell me. I mean, you're in the business, but then you have till you get to be about 20, 25 million. Institutions don't really get that interested in you unless you're lucky. And then once you get big enough to do it, but bridging that gap from wherever friends and family, have been tapped out to where you can, raise institutional money, that's the tough spot. And going back to the friends and family, of course, our underserved and under-resourced communities, the friends and family situation is not what it is for people who, have advantages. And that's something that Martha and her team have done a great job shining a spotlight on, and thinking creatively about how you get more capital at that stage. And then second problem, how do you help people bridge that gap between the friends and family and the institutional space? So that's how I look at it.
Mm-hmm. Yeah, I think this is a real big problem, right? Yeah. And this problem was an issue well before your tenure. And I'm glad to hear that your team is chopping wood there. The minority-owned businesses start with almost 3 times less overall capital than white-owned businesses, and represent just a small fragment of institutional capital broadly. And so having that capital reflect the diversity of their customers and the society at large, I think it's something that we all want to strive towards. And I'm sure your team is spending a lot of time here. I think the interesting thing about that is there's this issue around small minority and women-owned businesses. We spent this moment talking about that. But there's also an interesting similarity that's happening with minority-owned investment firms. And in general, we see those dynamics almost one-to-one, which continue to create all sorts of problems. So for context, firms owned by minorities and women manage roughly about 1%. It's 1.1% of the 72 trillion in assets under management. Recently, the SEC's Asset Management Advisory Committee met just a few weeks ago with members of NASP, the NAIC, New America Alliance, AIM, and other nonprofit organizations focused on access to capital issues to seek their input. We'd love to just get your thoughts as chairman. What actions is the SEC taking to bridge these gaps among minority-led investment firms?
Well, I'll say the first action was to hold that roundtable and hold that public forum and shine a spotlight on the statistics you just mentioned and so many more that, frankly, are head-scratching statistics. When you look at these, you're like, this just doesn't make sense. And that was step one. Step two is, what do we do to change it? Now, we have. I'm a due process guy. I'm a stay in your lane, limited jurisdiction. But within the bounds of our jurisdiction and what we do, how do we move this ball forward? Because the status quo does not make sense. You can't have that kind of outcome and not say there's a problem here. So that's where we are. And I was, let me say this, I was very pleased with the event because it was a very positive tone, and it wasn't okay, we did the event, now it's over. It's like, what are the next steps? How are we gonna move this forward? What tangible things can we do to move it forward? So that's where they are. We have an asset management advisory committee and a subcommittee. Gilbert Garcia and Ed Bernard, Dahlia Blass, our director of division of investment management. They're committed to this issue. So let's hope that this is the start of recognizing the problem and doing something about it.
That's great. That's great. Yeah, it's just such a stubborn problem, and it will take a concerted effort. I'm glad that you say that this is not the end. Right? Holding the meeting is the first step, and it's important, especially the groups that you brought together. I think they are the NAIC and NASP and all the others really on the forefront of thinking through these issues and how to tackle them.
And let me make a point that this should not be a secondary point. This should be a primary point. One of the data points that came out and was highlighted in this is performance is equal or better when you diversify in the way we're talking about your asset manager portfolio. And I think that it's now becoming more accepted that this is a value enhancing proposition. It's not just the right thing to do, it's a value enhancing thing to do. And that came through in I think very level-headed terms in this meeting, and that's important. And it's something that we stress here at the SEC. It's important to us here at the SEC that people understand that you're doing the right thing, but you're also doing something that enhances the value of the organization.
That's great. That's great. And I think if the CEO of Wells Fargo was next to me on this call, he would echo that. Charlie Scharf has come in and is espousing many of the things you just mentioned around thinking about diversity as a strength. And I think there's so many CEOs that have come out certainly over the last quarter, to really lean in and try to think about this differently. The last question I have on access to capital it's an interesting one. And I think, in preparing for this conversation, this is actually one that I actually had very little knowledge of. And when diving in, realized how consequential this matter is. And so your agency issued new rules that change the way proxy advisors operate, which could have significant implications to ESG matters. Could you walk us through your thinking on issuing these rulings and what you hope these new rules will achieve?
Yeah, I don't know about your proposition, whether it have significant implications or not. But let's just
let me clarify.
Yeah.
Right. So I think what I have seen certainly over the last quarter, looking at public filings, is a greater degree of disclosure around ESG matters, in particular around diversity matters. Right. And that has been new for me in lots of ways. And I think in some ways, of course, motivated by some of your agency's actions. So hopefully that gives you a little bit more.
Yeah, and look, there's I can advertise for this group. There's a GAO, General Accounting Office report, that goes into ESG disclosure, and summarize the report in a nutshell. It says people are generally satisfied, and there's a robust level of information for G. On S, it's a mixed bag. People are a little bit satisfied, a little bit dissatisfied. It's evolving. And on E, people are generally dissatisfied. And so the reason I mention that is I break those apart because I think making, when I say people, issuers on the one hand, investors on the other, and trying to get a meeting of the minds, each one of those you tackle in a different way. It's very hard when you lump them together to talk about it. So let me start with that. And we have pushed on S. We put out guidance during my time here about how boards should be, I would say, more direct in how they consider diversity in the construction of their board, being respectful of self-identification and concepts like that. And I think we're seeing disclosure in that area that investors and companies are more comfortable reviewing. And we're looking at the other areas. With respect to the proxy advisors, really just pretty simple approach, which is, hey, proxy advisors, disclose any conflicts, any material conflicts that you have, and let's try to get your advice out there in a way that the company has time to respond if necessary. We went back and forth on what the best way to do that. I think we landed in a way that preserves any kind of independence or like. And then from the perspective of investment advisors, when you're voting your shares, you can use a proxy advisor, you can use other services, you can tell folks how you're doing it. So at the end of the day, I look at this as bringing transparency to that voting and what I would say, that voting and solicitation process. And that's what we did. I mean, these markets have changed profoundly in the last 30 years. Almost all retail participation, not all, but 70-80% is through funds and investment advisors. And so,
no, I think the key point I take from that is you can't improve what you don't track.
Yep.
And the disclosures are very important in the fact that those disclosures are now starting to branch more and more into tracking matters concerning diversity and inclusion. I think is a good thing.
Yeah, and we have a pending rulemaking to modernize much of Regulation SK, and I can't talk about it specifically for reasons, but if you look at the proposal says, hey, just like we at the SEC are a human capital organization, many public companies have become human capital organizations. Their assets are their people. To the extent that, what the proposal says is basically to the extent that the board of directors and management tracks their employees and how it drives value, communicate that with your shareholders so your shareholders can understand how you look at those human assets that are so important to your business.
That's great. And so my last question, this went by pretty quickly. And so we're here. And it's another question that I spent quite a bit of time working on and thinking through. And it's a question regarding supply chain diversity. So, I just in general believe that it is vital to be intentional about everything you do as it relates to these types of matters. And ensuring that business dealings across the board are reflective of the communities that those businesses operate in and the customers they serve is brought into the boardroom, into the CEO's kind of thinking. I think that serves everyone. I'd love to get your thoughts on the SEC's own internal supply chain diversity and initiatives that you think again, on this theme of disclosures, your thoughts around how supply chain diversity could be a matter of investor disclosures in the future.
Yeah. So internally, and again, continuing with the theme of people matter, our Office of Minority and Women Inclusion really has two functions. One is making sure that we're approaching the supply chain issue in an appropriate way, and the other is how are we doing internally from diversity in our workforce and having what I would say is a constructive and opportunity-filled environment. They do a fantastic job here on the supply chain side. Vendor days, again, making sure that people have access, because if people have access and can compete, they do a good job. And so I can get you our numbers, but I think we're up in the 30% or higher in terms. Maybe it's approaching 40 in terms of minority and women-owned businesses in supplying. And average contract size is now above $1 million. I think it's about 1.3 million for those businesses. So not only in percentage, but also in value, we're driving this issue. And it's adding value because it's adding competition among our suppliers. So it's a win all the way around.
Wonderful, wonderful. Now I'll turn the table over to you. If there's anything that you'd like to share, if there's anything that I missed during this fireside, I want to give you the floor to share some of the updates and things that are exciting that's happening right there at the SEC.
So, well, you were kind enough to mention the AMAC, the Asset Management Advisory Committee, and our focus on diversity there. We've done similar events with other committees, but I do want to say that internally at the SEC, let me back up a little bit. When I got here, there were some statistics that hit me. And we call it the FEVs. It's basically how do people feel about the work environment score. And we're pretty good on most things, but on issues around respect and whether people felt slighted or felt that they had been subject to bias or had actually experienced tangible bias, there was a gap. There was a gap between the way what I would say is just to put it started, the white people who work at the SEC and the people of color work at the SEC perceived how we were doing, and said to myself and others, a lot of help from others, we got to close that gap. Wherever the truth lies, we're not getting there. So we got to make sure that we deal with that. And my senior staff, and then because they do it throughout the organization, they've sort of embraced the idea that this is something that we need to address. And we've taken a number of tangible steps, including making sure our hiring committees, internal hiring committees, reflect diversity, making sure we post more jobs externally, those types of things. And, look, hopefully, you don't, as you said, you need a thick skin to take one of these jobs. Thick skin only lasts so long. That's why they turn these jobs over. I'm going to be out of here, in some short period of time. I really hope that because the organization has bought into this value drive, then it lasts. So that's what I want to say.
Wonderful. Well, thank you so much for your time. You were generous today to carve out time for all of us. I'll hand over now to Denmark West to close.
Thank you very much, Jose. Not just for leading this interview, but for offering such thoughtful questions to drive this conversation. I want to also thank you, Chairman Jay. And the discussion was not only engaging, but we just appreciate you sharing your philosophy, your perspective, and taking the time to make such a thoughtful and engaging discussion with us all. In addition to that, we want to make sure we thank your team for making sure this actually happened. A combination of John, Christine, and Natalie. And speaking for myself, I was actually almost enthralled by the wide range of topics that were covered. Leadership of teams, transparency and reporting, distributed ledger and digital payment and settlement systems, access to private alternative investments, large strategic investments and initiatives to address fraud, access to capital for entrepreneurs and investors. And perhaps probably most importantly, the emphasis on diversity as a strength. I believe we all appreciate this, and we thank you for engaging such a thoughtful conversation between you, Osei, and you, Chairman Jay Clayton. I also want to thank all of you in attendance, but in addition to that, I want to make sure we thank our sponsors for helping to make sure that we could bring this together. A combination of Samsung Next, who was our title sponsor, Google, Morgan Stanley, Colonial Consulting, PayPal, and Motley Fool Ventures. So as a note, if you know Black or brown venture capitalists, we want them to be a part of our community. And we want to continue to build this ecosystem and continue to facilitate transactions that lead to greater investment capability for these venture capitalists. Finally, I want to say, please make sure you visit cultureshiftingweekends.com to get updates on the latest for our events and speakers. Thank you all again for attending. I hope you all learned something, or at least were engaged in the discussion. And hopefully in the chat, you were able to make some interesting and potentially valuable connections. I'm going to turn it over to Andrea, but as a final note, let's make shift happen.
Thank you, everybody. I think it's all been said. I just want to say, Jay, it was an honor to have this time with you. I think you left people wanting a whole lot more. I see that there were numerous questions in the Q&A, but we wanted to cover some of the sort of basic things that we discussed prior. So we'll send these questions to your team and see if there's anything that potentially could be messaged out post-event. But it was an honor. We look forward to inviting you back to the virtual world and an in-person event when we get back to the new normal. It was a pleasure. Thank you for your time, and thank everybody for attending.
I just want to say thank you to all of you. It's really was a great conversation. Jose, great questions. You have a second career in being a chat show host.
Well, thank you. You don't often get complimented by the chairman of the SEC on your commenting skills.
We have it on recording. We have it for the future.
Well, thank you so much.
Yes, thank you. We look forward to talking to you again.
Take care.
Thank you, Jay.